Stephanie, what do you make of this Goldilocks jobs report that we got today? Does that mean the Fed has done a good job and their job is done? Do we hold from here?
It's either high for longer or higher for longer, right? Okay. Depending on what the Fed does. I thought that the non-farm payroll numbers, it was a pretty good report in terms of making progress for the Fed, right? The ADP also confirmed that. JOLTS was weaker than expected, so that also confirmed that we're seeing a little bit of an easing in the labor market. That being said, initial claims, they are a leading indicator, and the 4-week moving average is at 237,000 jobs, initial claims, right? So during recessionary times, that number, a 4-week moving average on initial claims, usually gets as high as 350 to 375,000. So we are a far cry from really slowing down and into more of a recessionary level. That being said, in addition, average hourly earnings today was up 4.3%, the core PCE at 4.2. So to answer your question, the Fed is not, they may be done on raising, but there's no way that they're going to start to ease when their target on inflation is 2%, and you have a 4 handle on many of the readings that they actually care about. I actually have been very encouraged over the last couple of weeks, just overall on the markets, that we've seen a broadening out. Energy, for example, I know we're going to talk about energy later, but energy, the last month, has outperformed tech by 770 basis points. Industrials have beaten tech in the past month by 200 basis points. So we are seeing a broadening out, and I think that's a function of earnings coming in better than expected. I think earnings have troughed, and we are going to see a recovery into the later part of this year and into next year. And I think that's encouraging. So, yeah, okay, we can call it Goldilocks today, but I don't think much changes on the surface in terms of the Fed and homework to do. But I do see opportunities. Okay.
Jim, what do you think of this number? It seems like the markets are pretty happy with where it came in, where bad news when you're talking about unemployed Americans is good news for the market.
Yeah, I like the tone you're using. I mean, you're having a hard time saying it. I'm having a hard time saying it, too, because the unemployment rate did pick up 0.3%. Mostly because the labor force participation rate picked up, which is a good thing. But let's just be careful. I think that's where your sort of concern is, and I feel it too. Let's be careful. You like a report like this that gets the Fed to maybe back off a little bit, but you don't want this sort of trend to continue. By the way, as much as the overall headline number came in better than expectations, there was 110,000 jobs lost on the revision. So, yeah, I have a hard time calling this Goldilocks because there were some warts in here. You know, all that said, I think Steph's really kind of put her finger on the core of this, that the market is looking at earnings, and it's looking at it's starting to look at next year's earnings and saying, look, 11-12% growth in S&P 500 earnings is very makeable. Now, having said that, I think we're set up for a two-step dance here in the markets. I think you're going to have a face-ripping fourth quarter rally as the market gets through conference season and pre-announcement season in September and comes to be more comfortable on that. But I think when people come back from vacation next week, they're going to be a little focused on what is the state of the consumer right now. Steph, I hear you on jobless claims. Totally hear you. On the other hand, you had those ugly retail reports. You know, we do expect that higher interest rates are going to have an effect, whether it's mortgages, auto loans, credit cards, everything. There is reason to think that maybe the consumer is going to slow down a little bit, run through that excess spending. So I would expect September seasonality to take effect. But boy, am I going to be positioned for fourth quarter to be all in and just let this market rip.
Those personal income numbers yesterday were really quite strong.
I mean, spending like crazy,
right?
But
we are
how long can they keep doing it?
We are a nation of spenders, whether we have the cash or we want to take on the debt. Yeah. It's hard to bet against the consumer.
Yeah, Visa said the volume was up in August from July as well.
Right.
So we're talking about more spending on credit, too, which also can be concerning to some degree. I mean, Rob, Jim brought up seasonality, and Bespoke Investments actually said don't fear seasonality because of where we are right now with the S&P 500. When you're up double digits year to date through August, the performance in September actually is pretty good. 59% of the time we're positive. Where do you think we are setting up for equities for the back half of the year, or the last 4 months of the year at this point?
You know, we think it depends. I think the Fed has done a nice job tiptoeing through the tulips, but you have to make sure that this normalization that we're seeing does not turn into something worse. And I think that's what Jimmy was saying. And that's predicated on how strong the jobs market is. It's not just that we have a strong consumer because they had excess savings, because asset prices are up. It's because they have jobs and they're spending on a month-to-month basis. So we'll continue to watch that. I also think you have to continue to watch as as markets test these new, retest their prior highs, whether they're able to break through. And I think that's going to be a function of whether we continue to see earnings revisions on a positive trajectory and we continue to see economic strength. And that's yet to be seen. I think we've seen it, but how can it continue? Can it continue? And so I don't think we know the back half of the year. I think we know that a recession has at least been delayed. I don't think we're going to see a recession in 23. The possibility is there in 24. And if you start to see a rollover of these things, valuations are relatively high, and so you've got to be mindful of that. So we're not negative by any means. We're invested. We kind of expect a period of chop, and then we'll see. Jimmy expects a period of chop and then maybe a face ripper rally, I heard him say earlier.
It's going to be breathtaking. It's going to be breathtaking.